The loans that actually pay you back are the ones that upset Dave Ramsey the most. And he's like, why would I spend $100,000 to earn $2,000? Dave, what are you even talking about? No one is going out and just making up $100,000 worth of stuff to spend it on to try and get $2,000 of cash back points.
Right.
That's not what they're doing. No. They're spending $100,000 on their pay-per-click. This is spending that they would be doing either way. Now they're getting 2% cash back. There's no other loan that actually pays you back other than a credit card.
Welcome and thank you for joining us for today's episode, Disruptors, where millionaires are made. Today we have Ari Page with Fund and Grow, and Ari flew in from Spring Hill, Florida to talk about how he's helped his clients generate $2 billion in funding. Now, guys, I'm on a mission to create 100 millionaires. The information on the show alone is enough to help you become a millionaire in the next 5 to 7 years. If you'll take consistent action, you'll become one. And if you're already a millionaire, we want to recognize you here. So please scan that QR code on that page right now. That way we can recognize you. And if you want help becoming a millionaire faster, scan that same QR code. And before we jump in, if you're here to learn how real entrepreneurs are building real empires, hit that subscribe button, because every week we're dropping lessons that can create your first or next million. And guys, our AI lead manager is now up and running. If you want to hear what our AI lead manager sounds like, text AI caller to the phone number 33777. That's AI space caller 33777. Ready? All right. Well, I want to say, first of all, this is long overdue. Right. I've heard of Fund and Grow. We were kind of chatting beforehand. I've heard about you guys for a very, very long time. And I just found out, you're one of the original members in the family mastermind. Right. I came in a little bit later. I was not one of the originals. I came in a little bit later, but, you've been at this business for a very long time. But before we jump into the business, what were you doing before you went into business for yourself, or at least before you started Fund and Grow?
That's a great question. And Steve, thank you so much for having me on here.
Yeah.
Millions of people have watched your podcast, and it's just an honor to be here.
Yeah.
So thank you so much. So what was I doing before Fund and Grow? So before Fund and Grow, I was working for my mentor, Dave Candle, which was for Loan Pro Financial, which was a mortgage company. Mm-hmm. And so we were doing mortgages in California. And before that, I was working in the shipyard.
Shipyard.
Yeah. So that's
different.
Yeah. So that was a very big transition there.
Yeah. So what were you doing at the shipyard?
So I was a ship fitter, which means that they would hand you a stack of blueprints, mm-hmm. and they'd tell you, go on the ship and build it. So it could be ripping out something, putting in something new. It could be changing a space. We were doing a lot of upgrades to add air conditioning in a lot of the Navy ships, and a whole variety of things, really. Mm-hmm. But that was one of the big things. And it was a very fun and exciting career until I learned about this amazing thing for me called the law of attraction, which absolutely changed everything for me.
So what did you learn about the law of attraction?
Well, I learned that I can think outside of the lanes that I've been in the past. My past, my parents joined an Amish community when I was really young. It wasn't actually Amish. It's Amish-like. It's called the Bruderhof communities.
I see.
And
in California?
No, they're actually they actually have a bunch of different locations on the East Coast. They're global, but the ones that I lived in were in New York and in Pennsylvania.
I see. Okay.
And it's a really beautiful childhood growing up there. It's very communal. It's like the Amish, but instead of everyone being in their own home, they have it's like a communal setting.
I see.
So it's a little bit different, but I learned the power of the group, of how people can work together to create absolutely amazing things. Like, those people are not poor. Mm-hmm. They have some amazing businesses, and you look at them, they look like Amish people, mm-hmm. but they have businesses that are worth hundreds of millions of dollars. And all of it is through them working together. They're from the highest levels all the way down to the lowest person. And so it was a beautiful way of being able to be raised, to learn. And after leaving the community, I then, through a bunch of different jobs, ended up at the shipyard. So I had skills that I had learned from the Amish place that I was then able to employ and put to work.
I see. So then what got you into mortgages? Because that's a pretty significant transition.
That was the law of attraction.
Yeah.
So I was working 12-hour days in the shipyard, 7 days a week. That's 84 hours a week. Yeah. And if you don't do it, guess what? There's 1,000 guys outside the gate that will.
I see.
So you either work it or you leave. And when those Navy ships come in, it's 24/7, just boom, working on them to get them out. And once learning about the law of attraction, I realized I can't live my life like this. You know, I have a son and a daughter, and I need to provide for them in a way that's way beyond what this shipyard job could ever provide.
Right.
And so learning about the law of attraction, which is a whole thing, we can't do a whole podcast on that now. I was able to basically change what I was thinking about, change the way I was feeling, and insert other new things that I never would have been bold enough to think about.
Gotcha.
And so it got me just to kind of shift gears. And at that time, what that meant for me was responding to this guy that kept contacting me that I had met through a previous job. And his name was Dave Kendall. So he's the guy who ended up being my mentor. And,
why was he reaching out to you?
So the universe was knocking. And I wasn't answering. I wasn't answering until I learned about the law of attraction. And I was like, wow, my frequency wasn't there. I just wasn't able to line up with it. So once I did line up with it, I understood what Dave was attempting to get me to do. Really, he was trying to help me. I then was like, oh yeah, I want to do this. I don't want to work in the shipyard. I would love to learn how to do mortgages. I realized I need to put my energy into something for a period of time before I'm going to get any positive benefit out of it. Because when you're doing a mortgage loan or something, like if you're a blue collar worker, you're going to work for 30 days and not get paid.
Yeah.
You can't do that. And with a mortgage loan, it could be many months before you're going to get, especially on your first deal.
Right.
And so like I had to really open my mind. And so anyway, after working with Dave for a period of time, it was right in 2007, the beautiful, amazing crash
Well, before we get
came upon us.
Before we get into the crash, why was he reaching out to you?
So he was reaching out to me because he had started this process of being able to use business credit cards, and he wanted help.
I see. So it's business credit cards. It wasn't like mortgages is like buying houses.
No. Well, at the time he was still doing the mortgages, and he wanted help on his website. So we weren't quite doing the business credit cards yet, but he was taking testimonials and pictures and videos and putting it all together. And so what I was helping him with at the time was the technology side.
I see.
It was taking video, some video and audio files and converting them from like one format to the other. And that's what I had typically done for Dave in the past. I'd helped him with computer things.
I see.
So that's what I thought he was trying to contact me about.
All right, you didn't want that work.
I did not. No, honestly, he would ask me to do stuff, and then he wouldn't even PayPal the money afterwards.
Yeah.
And we're talking like $20 for can you convert this audio file so that I can put it onto my website?
Yeah.
But I started listening to what the videos and the audio files were saying, and they were talking about getting people business credit cards and to be able to use that to fill this LTV gap. The loan to values were dropping, 2007, 2008. What the banks were offering, the amount that they were offering was dropping really fast.
Right.
And you had to cough up extra money if you were going to close that loan.
Right. The house didn't appraise. You had to come up with the difference.
And Dave was using business credit cards to make up that difference.
Fascinating. I don't think I ever heard anyone doing that. So, okay. So he reaches out to you. You answer the call eventually. And so...
Actually, my wife at the time, she had my cell phone. She picked it up. And I was like, it was Dave. I was like, all right. And then I took the call and changed my life.
So what did he have you doing when you first started working for him or with him?
So when I first started working with Dave, he had me calling leads. And he basically was like, Ari, go read the website and I'm going to fax you over a lead sheet. I was like, but wait, Dave. Click. And so I sent him an email like, Dave, I don't know how to sell this. I don't know what I'm doing. And he's like, Ari, I told you, go read the website.
Right.
And I'm like, I'm the kind of person that asks a million questions, right? I'm not just, so anyway, after thinking about it, I was like, well, you know what? I could keep on doing what I'm doing at the shipyard.
Right.
Or I could try something new. And so I started calling leads. And I remember the first one that I closed was this guy called Mike on Memorial Day. And he's like, why are you calling me on Memorial Day? And my only line was, because that's the only time you're going to catch an entrepreneur not working. And he actually bought the service. And then he never even contacted us back ever after that.
Got it.
And he specifically said, he's like, Ari, your sportsmanship when it comes to sales, like, I must have been so green, so just like excited that he felt it.
Yeah.
And that had something to do because he even mentioned it on the sale. So I always think back of that guy. It was first sale.
Okay. So read the website. You still don't really know what was going on. Did you read the website? Like, did it give you more clarity?
A little bit, but it was talking about just using business credit cards to be able to, fill gaps in funding.
Right.
And at the time he was still doing loans, but I was calling on the business credit card side.
Okay. So then you were able to get some sales going. And then how did that continue?
So Dave had all of his people working from home. And I don't know about you, Steve, but that doesn't work very well.
Yeah.
You have some people that can do good working from home. And another guy that Dave had working for him, his name is Daniel. Daniel is my partner today.
Got it.
And he was also working from home. And so it was basically me, Dan, and Dave that were doing all of this. And they were still closing business loans. I was doing business credit cards, and it was all under Dave's company. And we were doing the processing together. And it kept on building and growing. I kept on asking Dave, we have to hire other people. We need to do this. We need to do that. And Dave's idea was, well, I'll give you a little cut here and then you do that. Like, Dave, that's not the way it works. You have to be able to scale. We have to, you know what I mean? Like, I don't know a lot, but I do know that when I worked at the shipyard, there was a lot of guys in there. It wasn't just me. You know what I mean?
Yeah, you go to, I know, like whenever I go to In-N-Out, it's like, it always seems like excessively overstaffed. Go to Chick-fil-A. Always seems like it's excessively overstaffed. No other industry, you're like, you just got to hustle through it.
Yeah.
But for some reason, a lot of us kind of like start off with like, I got to do everything.
Yeah. And especially entrepreneurs. Yeah. They don't want to relinquish that control to others.
Right.
So then so Dave was then going through some lawsuits that had to do with mortgage loans that he had given it was like I forget, but basically he had like assigned a mortgage, a lady's mortgage, where he basically was going to like get her house when she died, and he was going to pay for the payments until she died. And these family members that were not her family members, they were like nurses and stuff that had worked for this lady in the past, came up and claimed to be the children, and it created this whole big suit that for you and me, we would have just moved on from. But to Dave, it became the end of the world.
Yeah.
And he focused on this lawsuit like in such a big way that he felt like he needed to move on from the other things that he was working on.
I see.
And so he first asked Daniel, he said, Daniel, do you want to run this company? And at that time it was called Credit Card Builders, because we specifically were building credit cards for small businesses.
Yeah.
But that's the worst name in the world.
Why is it the worst name in the world?
The word credit is a pejorative in many people's minds. The word credit card is. The word builders, they see that as a blue collar. Like, it's got so many pejoratives built into it, just the word credit card itself.
Yeah.
You know, our new name, Fund and Grow, is more about what we can do for you.
Aspirational.
Yeah.
Yeah.
And that was such a fun process coming up with that. We were going to go with growth capital, because you think about it, it's the same thing. It's Fund and Grow.
Right.
It's about growing. And it's about getting access to capital. Yeah. But go on Google and type in growth capital. You get like 2 trillion, you know what I mean? Like every single company out there that does anything close to what we do, they're growth capital partners, unsecured growth capital. There's like every variation of that. So I went through this process and we eliminated all these different things. I don't know if you've ever gone through the process of nicknaming a company. And so I went through that. Okay, you have a mentor that kind of helps you. And I was just going through it and like figuring out all these things until and I really liked the word fund and I liked the word grow. Just couldn't figure out how to, growing funds, until I came up with the idea of just kind of smashing it all together, fund and grow. Yeah. And I remember when I first sent it through our text chat, and people are like, that doesn't work at all. That fund and grow. And I'm like, stop saying it like that. Say it, fund and grow. Fund and grow. Think of it as an N, fund and grow. And then suddenly it caught on to us and we were like, wow, this was like the best name in the world. It just felt like magic.
Yeah. So, all right. So Dave reaches out, Daniel, we interested? He's like, I'm not sure. So what happened after that?
Oh, that's right. So Daniel he's more of a CFO. He's like my CFO. He's more of an accountant. Very good at numbers, very good at all of that. but not a outwardly facing type of individual that wants to do sales, webinars, presentations, speaking, so on and so forth. But he wanted to be part of it, just, the part that he's used to playing, which is as a chief financial officer. So so Dave first offered it to him. He said, no, but you should offer it to Ari because he's already doing all the work. Right. And so Dave offered it to me. At first I was like, Dave, are you under any kind of investigation? What's going on here, Dave?
Right. Why would you give it away?
Yeah. Why are you doing this? Mm-hmm. And he was ready for that. It wasn't something, he got paid in perpetuity. Mm-hmm. So
in what?
As a stock sale agreement. Mm-hmm. So every month he got paid off of Funding Grows.
So he still gets paid today?
Well, he passed away many years ago, but if he hadn't, he would be.
I see. Okay,
yeah.
So there was something in it for him.
Oh, yeah. Oh, yeah. He was getting paid excess of 6 figures a month. Yeah.
Oh, wow. So it worked out well for him.
It worked out very well for him. But a lot of people would think, well, why wouldn't you want to make, $1 million a month? Mm-hmm. But I don't think Dave could have ever really scaled it to that. That wasn't his expertise. His expertise was coming up with ideas and creating things. Me coming from the Amish background and understanding the power of leverage in the group and being able to trust. Like, I know that these people aren't going to do it as good as I'll do it. But it's just a percentage that they're going to mess up. Find out that percentage, then operate off that, and then try to bump it up. They're not going to do it perfectly. But even us, we don't do it perfectly every time.
Not even close.
Yeah.
Yeah. Okay, so he offers it to you, and you guys come to terms fairly quickly then?
Yeah. Yeah.
Okay. And when about was this?
So that was in 2009.
Okay, so it's still incredibly challenging market.
Yes, right after the crash of 2008. Yeah.
Incredibly challenging market. Credit's tight, and you're doing this. Well, now it's Fund and Grow, but it was like credit card.
We were still credit card builders back then.
Yeah, credit card builders. So what was that like? Like this transitioning. Like, I guess first question: do you remember approximately kind of like revenue you guys are doing or like volume?
I think when I bought the company from Dave, we had done maybe 800,000 or 900,000 in the entire year. Mm-hmm. So the revenues were really small.
Yeah. Okay. And so in taking it over, like what were some of because you obviously had to change the culture, the look. I mean, you said it was basically just 3 of you, right?
Yeah. At that time.
There were no employees.
Yeah.
Okay. So let's talk about obviously, like spoiler alert, you're still here, you're doing well. So what were the initial challenges in building this business?
So the first thing that I did after becoming the owner was I took everyone that was working from home, and which was me and Daniel, and I was like, we're going to create an office. Mm-hmm. So instead of having outside contractors, instead of doing that old model, even though it was only a couple of us, we're going to come up with a new model, which is going to be one to have people come in and sit down and do work. And Daniel, you're going to hold those same office hours. I'm going to hold those same office hours. So that's what we did. And it started with me going to my office in Spring Hill, and it actually first started in my living room. So I had my first 2 employees were Zach and Liana. And I say that because they still work for me today. Okay. Great. And there was others kind of in between, but they don't work for me. But those 2 worked literally out of my living room. Mm-hmm. Zach is now our guy on YouTube. He's our YouTube guy.
I see.
So after we worked out of my living room for a little less than a year, I then ended up renting a unit in Spring Hill, and then we hired more people, went to that unit. Then I ended up buying that entire building. Then eventually I think it was in 2019, we bought a new building in Spring Hill, which is about 5,000 square feet.
But what kind of adversity did you have? Because 2009 was bad. Like, I mean, we're talking people getting divorced, people killing themselves, right? Like, it was a bad time. Credit was super tight. Did that affect your business? Was that good for your business? Was it bad for business?
Yeah. So this is a really good question, because at that time, what was crashing?
Real estate values.
Yeah. So
foreclosures.
So specifically with the banks, it was mortgages. Mm-hmm.
Yeah.
And one of the things that they were doing was the banks were going from putting out major, $1 million in one mortgage to putting out what they would see more as a micro loan.
Mm-hmm.
So a healthy model that was working suddenly is crashing. Now they're going to turn to the other models that they already had that were not crashing, that were already doing well. We found that we were able to get access to more business credit cards as the crash went on.
I see.
They were unregulated loans versus the highly regulated loans. And I know it crashed because supposedly they removed different types of regulations and so on. Mm-hmm. But really, there's a lot of regulation still tied up in mortgages.
Yeah.
And it made it more difficult for the banks to deal with that crisis. Because of all the extra red tape, mm-hmm. they turned to other loan programs that were not having those problems at the time. Credit cards did have a default rate, but they didn't have a massive systemic crash of all credit card companies and business credit cards like the banks did with mortgage loans that physically needed bailed out from.
Yeah, when those mortgages were significantly larger than credit card balances.
Yeah.
Yeah.
And some of them were like Freddie and Fannie, like that, they don't even do credit cards. Those are the major mortgage holders.
Yeah. Okay, so it's easier to get credit, so lend it and get credit from, I don't know, who do you get the money from exactly?
So the business credit cards that we apply for are from all of the major lenders. Mm-hmm. So anybody watching right now could Google 0% business credit cards or just even 0% credit cards in general. Yeah. And you'll find that every major bank offers it.
Okay, so even though the banks were in crisis with taking over properties, foreclosing on people, and all this other stuff, on the other side of it, they were still just as happy to hand out credit cards, 0% unsecured, and so on.
Well, if you think about it, the banks are just big cash flow machines.
Mm-hmm.
If they're not lending money, they're not making money.
Right.
So they couldn't just stop lending.
Yeah. Yeah, and I think that's probably an important principle, because you're in this world. You want to dive just a little bit deeper, like why that's the case? I mean, it might sound obvious. Maybe someone's listening, like, well, what's the big deal? But you want to explain a little bit greater detail why they have to lend?
Yeah. So when you look at banks in general, and they're not making a whole lot off of their money. They're having to do 1,000 different things with their money in order to make money. And so their different lending programs are definitely ways that they can bolster their revenues, that they can make more. Business credit cards in general tend to be very low on default. There's different default rates on everything, but with personal cards, the default rate is at least 2 to 3 points higher than on business credit cards. And just in general, using business credit cards and unsecured cards is a safe way. It's a safer way than the banks giving out these massive $1 million loans on properties that if they lose on $1 million property, that's that's a huge amount that they've just lost through a mortgage. Mm-hmm. And they get access to the property, but most of the time they're not even being remunerated properly for that. They're selling them in short sales so quickly. So from what I've seen, the machinations that provide the liquidity behind these different types of loan programs is absolutely, something that it's just a very complicated process, and it doesn't always pop out to us as to why. Like if we had one division that wasn't doing so good that does loans, but we have 5 other divisions, this one's not doing so good. It doesn't seem obvious to the public why they are going to boost these other divisions temporarily. Mm-hmm. But of course, if these ones are unregulated, this regulated one is not doing as well, they're going to boost it in the ones that are easier to put money out. Right. And so we could get way more complicated on it, but
but that's perspective, right? Because I don't think everyone understands that, because we don't look at it, generally speaking, in that perspective. It's like, well, there's credit's tight. It's like, no, like credit's tight over here, so we have to loosen up credit over here so that we can keep the flow going. So not everyone knows this. We don't talk about it a lot, but like I happen to be a partner in a bank, right? And so when I sit there and through like our annual meetings, and I just look at it, like, what are the 2 things they care about? Cash in a bank, and how much of that have we lent? That's the 2 numbers they care about, because the cash that they have at the bank, they're paying, if it's a CD, like 4.5%, right? So whoever's putting money in the bank, they're getting 4.5%. They have to lend it at like 6%, and that arbitrage is all they make.
Yeah.
And any dollar not lent, they're still paying the premium on. It's not borrowing it, right? Someone's deposited that money, but there's a cost.
Yeah,
to the bank for those deposits. So you have to get that money working. If you don't,
yep, they look at it like it's a block of ice.
Mm-hmm.
That money, those deposits are a block of ice that are just melting.
Right.
And if they don't take that and put it to work right away, it's not going to grow.
No, it's not growing. So, all right. So then it was easier to get capital to lend. How did you grow the business? How were you finding people that were looking to get business credit? Investors, you're not going to want to miss Carrot Summit, August 27th through 29th. It's online and free to attend. Day one is all about online lead generation, from SEO and paid ads to video marketing and $1 million funnels. Day two is all about closing, negotiation, follow-up, and dispo. You'll hear from Ryan Zolan, Jamil Damji, Henry Washington, Chris Voss's team, and a whole bunch more. And I'll be there breaking down seller calls with a couple of rookie investors. It's going to be a lot of fun. Grab your free seat at carrot.com/Steve, STEVE.
Just like I met you, Steve, through Family Mastermind.
Mm-hmm.
So Dave had taught me about affiliate marketing because that's what he was doing with Loan Pro Financial. So he had originally made affiliations with companies that was specifically about referring mortgage loans.
Mm-hmm.
But then when the whole industry crashed, Dave was talking to those same affiliates like, hey, look with this business credit card thing that we're doing. Mm-hmm. And at that time we were advertising, getting up to 500,000, easily getting it. And you didn't even have to do a cash advance. You could just literally have them deposit the money from the credit card into your bank account.
Wow. Okay.
So Dave took the relationship of those affiliates and started selling the business credit card program to them. We were selling it at $1,500 an hour, and it would take us on average 15 to 20 hours per client. And after a period of time, the affiliates that we were working with were like, listen, guys, and I don't know if because we were making more than them. They were like, listen, guys, you have to put this into a package. You can't just be $1,500 an hour ad nauseum for our clients. It needs to be, a specific thing. We need to make it easier to sell. Plus, you guys will probably make more. You'll sell more. Mm-hmm. So you need to create a system and you need to have a package. And then that's where we came up with the idea of the membership of saying, well, we will apply this amount of times for this fee.
Mm-hmm. All right. So you changed your pricing structure.
Yes.
To, instead of per hour, it's like, here's membership and here's how many hours it comes. And we should be able to get it done in this amount of time.
Yeah. And then working with those affiliates led us to go to other conferences, masterminds, meet other affiliates, and then figure out better ways of being able to describe and discuss what the Fund and Grow program was, how to use business credit cards, how to do these affiliations with other companies. So if you have a real estate educator and they're teaching their clients about getting access to real estate, buying real estate, doing fix and flips and burring and all of these different things, what do you need for that? Money.
Right.
And it would be great if it was other people's money, right? Mm-hmm. So it just makes perfect sense for these real estate educators or any of those affiliates to partner with us. Mm-hmm. So we're working with them to help them sell more of their own product, to help them create liquidity for their customers so that their customers can go out and do their course.
Yeah.
So that was kind of the way, was through affiliations.
So I think it's an important point because we have our own company and we're trying to grow through affiliates, right? And then you look around, PropStream sold, a couple years ago, whatever, maybe 4 years ago now, right? Over $100 million, right? How do they grow? Affiliates, right? And you look at Batch, right? They just sold recently. How do they grow? Affiliates. So there's a lot that maybe is not talked about enough, right? But I think this is a huge, what's the word? Not a niche, but a specialty that a lot of people could definitely learn a lot more about.
Yeah.
So from you, how did you said Dave taught you about affiliate. So step one, right? I want to grow my business through affiliate. What are the first things you want to do in wanting to build your business through affiliates?
Find conferences and masterminds that are going to have synergistic businesses at there for you. Mm-hmm. For example, for us, the real estate educators or an Amazon reseller, someone that teaches other businesses how to sell on Amazon. Those are going to be perfect partners for us. So we would go to a real estate investing conference.
So I guess step one is find people whose client base would benefit from your services.
Yes.
Okay. Right. That's step one.
Yeah. Then it helps if you're a speaker on that stage so that you can speak to the other speakers because they're not going to really speak to you if you're not speaking on the stage.
Right. So you have to get authority. So A, reach out, find who it is, and B, have them help you create authority.
Yeah.
In there. So speaking on stage, not sitting in a booth in the back.
Right. Yeah. You can have someone sitting in that booth, but not you.
Right. So have you found what's the difference? Have you tried just sitting in a booth in the back?
Yeah.
What is the difference? Is it 10 times different, 100 times different between speaking on the front or sitting in the back?
It's 100% difference. Yeah. If you're speaking on stage, people are going to come up to you. They're going to ask you questions. If you just run a booth in the back, people just walk by. Mm-hmm. You'll have people come up and ask questions. They'll be interested. They have nothing else to do at that moment. So they'll.
Curiosity.
Yeah. But in terms of them being really compelled, you kind of need to speak. Now, one of the things that we've also found is that if we have the main presenter talk a lot about Fund and Grow, there's a lot of conferences that we are kind of at without actually being there, where they're talking about if you need help funding any of these programs that we're talking about at the conference, or if you need funding for real estate, or if you're at the back table trying to purchase something and you can't purchase, they'll bring up a QR code that has our pre-qualification tool. And then they'll just funnel people right into it by talking about us. They'll bring up the QR code on the main screen a couple times, just in a couple key moments. People scan it, and we'll find that we can channel way more people without us even showing up to the event. We can channel more people into the pre-qualification, which is going to pull their credit, and it's going to tell us exactly how much funding we can get for them, which then they become a lead under that affiliate so that our sales team can follow up and close them.
Gotcha. Okay. So going to events, speaking on stage, what else do you have to do with the affiliates?
You have to do a good job for them. You have to get a lot of funding for their clients. And then they'll give you introductions to other affiliates, which is really, that's
a referral to other affiliates.
Yeah. And that's really the way we got our first affiliates, was by our top affiliates telling their friends and then telling other affiliates, and because they don't really take your word for it, not unless you produce
business. Which was going to be my next question, which is, let's say, who's your biggest affiliate right now? Who refers the most business today?
We have a big affiliation with NerdWallet.
So NerdWallet, right?
Yeah.
Big website, right? When you Google things, there's Bankrate, there's NerdWallet, right? All that stuff. That's what I'm thinking. That's correct?
Yep.
All right. So how do I, Steve, right, if I want to get NerdWallet's attention, how do I get their attention?
Wow. Now that's a difficult one because with these big companies, like with NerdWallet, we had to try over and over and over and over and over and over and over. You have to just be okay with rejection, and you have to keep trying over and over. With NerdWallet, there's no conference that we went to that we could meet the owner of NerdWallet. They did $700 million last year.
Wow.
You know what I mean? We're lucky to speak to the person that runs a division of their affiliate department or whatever. So their vetting process was extensive, but they're, working with them is great. We have an integration. So when people come to their website and they're looking for small business credit cards and it matches our criteria, then the website it just pushes the data right into our,
guys. Yeah. But how did you get that?
Just by trying over and over again
on the phones. Did you go LinkedIn, cold call, the front desk, walk in with donuts?
No, we didn't go to their headquarters. That's a good one though. But and I've heard that can be helpful, or even sending gifts.
Right.
But the thing is that I could send a gift to you, Steve. People can send a gift to me, but I don't even know who the owner of NerdWallet is.
Right.
Or even how to get access to his house, to his address, or where would you send it? I'm sure there's thousands of gifts being sent to NerdWallet's offices every day.
Right.
Fund and Grow gets it. I'm sure you get them sent here all the time.
Yeah, always appreciated.
So, but it is hard to, with those bigger companies, it's about what I would first recommend is you go to their website, you apply for their affiliate program. And if you know anybody else that's already in their affiliate program, of course, you can talk to them to try to get them to talk to their contact at NerdWallet. We didn't have that. I'm just saying,
right.
Sometimes that is the case. But applying and then having synergy, obviously, we are a company that does fit into their criteria of who they would refer to. They didn't have to reinvent anything for us.
Yeah. So it's a sales team who goes, is it Ari? Is it a sales team? Who's responsible for creating that relationship?
So at that time, when we created the NerdWallet relationship, that was people that worked for me. I believe my executive assistant is the one that was doing the reaching out and the communication.
Okay. And then they're just trying to communicate with them in every which way. So go through the front door, which is go on the website and fill out the form. but still just nonstop follow up.
Yeah, nonstop follow up. Yeah.
Okay. Who is your biggest affiliate in the real estate space?
Probably Connected Investors.
Connected Investors. Okay. Which is, another company, if I understand correctly, had a large exit, right?
Yeah.
And so, and I'm guessing they probably got quite a bit of affiliates.
Yeah.
So let's say the same thing here, right? So me, like I want to get connected with Connected Investors. What's the first thing I do?
So for us, we met Ross Hamilton at the Family Mastermind.
Yeah.
So he was also, I think he's one of their founding members.
Yeah.
So
he's pretty active in there now, right now.
Yeah. So at that time, my team and me were at Family Mastermind, and we met Ross, and it was a match made in heaven because they now have a kind of like a little funding marketplace on their website. So if you're looking for $1 million loan, they're going to refer you over here. If you're looking for this type of loan, they're going to refer you there. So
they can segment the list.
Exactly. So Fund and Grow is one option, just like on NerdWallet.
Yeah.
They have a variety of different types of loans they're going to refer to.
Yeah. So again, some of the concept was with Connect Investors was that you were able to create that relationship because you're in the mastermind together.
Yes.
So did you know Ross prior to joining family, or like, hey, we're in family? Oh, hey, it's Ross. Let's create a relationship.
That's because of family. Yeah. So, and we had done business with some of the businesses in family that we were just already doing business with them before we even, before Matt had even created family.
Yeah.
Because we were one of the founding members. And having those relationships with those existing affiliates made Matt Andrews aware of the fact that we are an honorable, legitimate company, which of course Ross Hamilton checked with him before doing anything with us. So it's a whole network, and of course they're going to go online. They're going to research us. They're going to see our reviews. They're going to see the people that are writing scam and this, that, and the other, and they're going to weigh all that and balance all that. So it's not just about relationships either. Some of it is also about like there's affiliates that approach us that we got. They were highly recommended by friends and affiliates. And you go online, and you're like, I could never promote this. Like, have you looked at anything under page one? You know what I mean? It's like, no, I couldn't do that.
Which goes back to reputation. And so like that's something that we talk about quite a bit. About like make sure you take good care of your name. Something growing up. When I was a kid, my dad, said like, hey, like make sure you take care of your name because you only get one of them. Right.
Yeah.
And that was when I was a kid. Today, it means way more.
Yeah.
Right. Like, what was it? I always say, keep your jersey clean. Right. Like you have to have a pristine reputation. Every once in a while, our sales guys are on the phones. They're like, well, I don't know much about Steve Trang. I don't know if I should buy his product, blah, blah, blah. And one of the things that I've told them, like, just tell them to Google me. Like, good luck finding anything bad about me. Right, out there. You can't. And so, yeah, I applaud you that, right? For doing a good job fulfilling all your clients, keeping them happy. Doing a good job, because that's what leads to these other opportunities later on with Ross Hamilton with Connect Investors, which leads to NerdWallet, right? And I just
want to quickly throw in there, even the negative ones, even the people that have written negative, if you're doing your job good, their negative review is going to be like this. They promised me 100,000 and they only got me 75,000, and they said they were going to get it in 2 weeks, and it took 2.5 weeks. And you get what I'm saying? Like, even the negative reviews are going to be like, I'll sign up for that. Yeah. You know what I mean? Like, they're going to be like,
That's not discouraging.
Right.
Yeah. That's a good point. Very, very good point. And so, for everyone that's listening there, right? So the first one was just incessant follow-up, which is sales.
Yep.
Right. That's just sales, prospecting. Number 2, networking, masterminds, right? So like we're in family mastermind together. And then, you guys listening, I'm in all sorts of different masterminds because it's the easiest way, right? We're all rowing the boat in the same direction. We're all trying to accomplish the same things. It's easier to do business with someone that is in the same room, has done similar things. It makes sense for us to collaborate and have synergy to do stuff together versus someone that, I've never heard of that does a cold outreach. I mean, look, we're talking earlier before the show, right? Like, I was aware of Fund and Grow because one of your sales guys reached out to me many years ago. And I talked to him once, but I was like, yeah, I'm not really interested, right? Because I didn't know who he was. I didn't know who Fund and Grow was. I didn't know who he was. And he's like, well, go talk to this other person. And I did. He's like, yeah, that guy made me money. But then I was kind of like, I was not really sure. I don't use you guys. I don't want to promote you guys, right? That's kind of the conversation. But now, right, we've interacted through Amanda initially, and then Amanda connected you and me. How does that happen? Through the mastermind.
Yeah. Yep.
Right.
And then when we were at family, literally, you're like, we saw each other.
Right.
And you're like, hey, I want to talk to you.
Exactly.
Yeah.
Right. Is there a third thing? So besides, like prospecting, going through the front door and prospecting, masterminding, anything else for people listening? Like, how do you grow your affiliate reach?
Requesting clients that have to leave a public experience, to tell them, you need to let other potential entrepreneurs know about your experience with Fund and Grow, because your business couldn't have gotten this leverage without it. So asking for testimonials, I think that's an important one, because that kind of floods the net with all of your testimonials. And I see companies out there that I know do way more revenue than we do. And I don't see as many reviews.
Yeah.
And that's just a systems process. It's as easy as just putting in your workflow, putting in a specific node that's about requesting a testimonial. And you try it a few times, you perfect it, and you find which one, 89% of the time they're going to respond to in a way that it's going to end up leaving a review. Right. And then boom, now you got all these reviews going out just like clockwork with every client that's graduating from the program. So I think that putting that word of mouth out there and getting a client to write about that gets them to think about that.
Yeah.
And in that same email, we even recommend them, by the way, you should probably send this to like 5 friends of yours.
All right.
So.
Yeah. So I was a client. Technically, I guess I'm a client. So, there was a moment in time where
I didn't even know that.
Yeah. Well, I went through Amanda.
Okay.
So this is before, she decided to do something else. And so, yeah, she connected me, got a loan done. I was like, wanted to get some cash on hand. And I want to say, the experience, because I've tried with other companies, and I felt like I was kind of felt like I was doing the work, right? I felt like I had to push. Right. So it was pleasant working with you guys. It was hey, she was like, send me these documents, give me this. And then I want to say 3 weeks later, it's hey, we got it approved.
Yeah.
Okay. There wasn't this thing where I'm chasing you.
Yeah.
It was hey, I submitted my documents and then it was taken care of.
Yeah. We are, in terms of our systems and processes, we are super on top of moving our clients forward, getting them to funding, getting them out the gate. Because we work with affiliates that are only referring them so that they can move forward with their programs. Our affiliates are logging into the Fund and Grow affiliate account and they're saying, were they funded yet? They weren't funded yet. What's Fund and Grow doing?
Right.
Because they have deals that are hinging on that.
Right. Your clients, your affiliate partners, they're waiting on you so that they can get paid.
So that they can move their clients forward. And and usually their payday is way bigger than any commission they're making from us.
Right.
It's nice that we're paying them a commission, but they're looking for the commission on their $100,000 program.
Right. Exactly. Yeah. It's holding them back on potential revenue. Yeah. Forget the affiliate. On potential revenue.
Exactly.
Right.
Yeah.
So you got to keep everyone happy.
Yeah.
Yeah.
So, and beyond that, just from an ethical standpoint, how are you going to get up every day and be able to do what you do and be passionate and excited if you're not really benefiting people? And if you're not really benefiting people, how is it going to even grow? From a law of attraction standpoint and from an energy standpoint, it has to be something that's uplifting. It has to be something that adds value. Otherwise, value won't come back. In terms of law of attraction, mirroring energy.
Well, yeah, because I did, I went with this other guy. I tried it some time ago, and it felt like I was doing all the work. And in the end, it's we got you approved for a credit card. It was $9,000. $9,000 isn't worth me. If you would have told me in the beginning, I get approved for a $9,000 credit card, I wouldn't even filled out. I wouldn't even send you an email, right?
Yeah.
So it was just this awful experience. It was very, very bizarre.
Well, I gotta say that sometimes we have a harder time with, you could have a 750 credit profile. And even though these are business credit cards and report to the EIN, they still look at the personal. And you could have one 750 that produces a $9,000 card. And then one that produces $100,000, over 2 or 3 cards.
Yeah.
And so what we created our own algorithm, our own software that will run your credit and be able to give a printout or, our synopsis of how much we believe we're going to be able to get based off of all of our experience, all of our clients that we've put through. And it's pretty accurate.
Yeah.
But every once in a while, we still run into that. And so it's a difficult thing. But when it comes to what we're doing for the client, that we want to be on top of it. We want to move them forward because, again, we have affiliates breathing down our back. But at the same time, in order to really be able to move someone through the program of what we said that we're going to get for them, we got to get them through multiple batches of funding. So sometimes we got to prod them and we got to move them forward. And with the FTC coming down heavier and heavier and heavier on credit repair companies, credit stacking companies, all these different companies, it's really important that we follow the guidelines or, the law, whatever you want to call it. Like, I don't think it's not actually a law, but basically that we're following regulations in such a way where the banks aren't going to single us out. So one of those things is to walk the client through this process, because we can't directly communicate with the bank for you. We have to walk the client through that process. And so that's an important aspect, is that we want to be compliant, which means that it's a done with you service, that we're doing it with the client. So there's some things that our clients have to do to get access to the funding, but then there's some stuff that we're doing that we're legally allowed to do on their behalf. And then there's some things that the only way to get that funding is to have the client make that phone call. But in our case, what we do is we prep the client, we describe exactly what needs to happen. We'll even go as far as getting the underwriter and them on the phone and doing the hold time for them. But the client is the one, and this is all surrounds legality. The client is the one that actually has to do that communicating. And so that's where we've seen some of these other companies, and I don't want to name any names, but there's quite a few other companies out there, ones that I've even met recently at different masterminds. And one of them, the owners of them were like, Ari, I would love it if you could like look over my website and stuff. And I did. And I was like, dude, this is like an FTC disaster waiting to happen. Like your entire website doesn't say anything about business credit cards. And you sell, well, so a lot of times when someone's a credit card stacker, when they're selling business credit cards like us, they don't want to tell their prospective clients that they're selling credit cards, because the word credit cards just don't sound good. Like funding and credit line and, a line of credit and all of that sounds so much better.
Sounds more sophisticated.
Yeah. And that's what these other companies were doing. Like, Seek Capital as an example.
And Dave Ramsey hammers on credit cards. He doesn't hammer funding or anything. He hammers credit cards.
And that doesn't make any sense to me. Because think about this. You could get a mortgage and use a mortgage, and that mortgage loan will never pay you anything. They'll never give you a percentage back. They'll never give you anything except for grief, and you have to pay the payment. Same with an auto loan. Same with a business line of credit or a HELOC or any other type of loan. The only loan that will ever pay you anything is a credit card. And you could get a 1.5% cash back, 2% cash back. You get the airline miles, which end up being more than 2% cash back if you know how to use them properly. And so the loans that actually pay you back are the ones that upset Dave Ramsey the most. And he's like, why would I spend $100,000 to earn $2,000? Dave, what are you even talking about? No one is going out and just making up $100,000 worth of stuff to spend it on to try and get $2,000 of cash back points. That's not what they're doing. They're spending $100,000 on their pay-per-click, on their different, their facility, on their, phone bill, on their electric. This is spending that they would be doing
anyway,
either way. Now they're getting 2% cash back. There's no other loan that actually pays you back other than a credit card. And that's really important. And then if you're looking at the airline miles, like you can, it's absolutely amazing that you can double, triple them. People don't know that. Like if you are using like the American Express or like any of the cards, like the American airline card from like Barclays, if you use the card and you build up 20,000 miles, and then you go to purchase using the Barclays website, your airplane tickets, you're only going to get a certain amount of miles. But if you go and log into you create an account at American Airlines and then log into your account at American Airlines, and then you do a transfer from your Barclays card, the points, over to your American Airlines, suddenly the points are worth like 10 times the amount.
Really?
And so when you're spending directly out of the points programs, you kind of get screwed. But when you learn to transfer the points and use them through these point transfer programs, you can get, in some cases, up to 10 times the amount. And that's for people that just would rather use it for traveling and so on versus the cash back. Personally, I like the cash back. On the webinars, I bring up screenshots of like Fund and Grow's cash back deposits. I think that's pretty cool.
Yeah. All right. So before we get back into this, because I want to talk about like, you know, the how to use Fund and Grow. We talked about how you grew it, which was affiliates. That's been your primary driver.
Yeah.
Okay. So what were some of the adversity on the way in building your business? Because again, right, you're here, you're doing well. What were some of the big pain points?
My name is Lance McCann. I have recently switched sessions with Ian Ross. Those conversations with Ian has made me $50,000 in the past 2 deals that I've had. I was able to renegotiate, go back and renegotiate the original purchase price on one deal, and I saved $40,000. I got another $10,000 off my other deals. Call Ian, give him a chance. You won't regret it.
If you like what you just heard and would like similar types of success, text CLOSE to 33777, and we'll see if you qualify to join Objection-Proof Selling. We're taking good sales reps and we're making them objection-proof.
So one of the problems with scaling is finding a good employee base, creating employees and different departments. Fund and Grow has, at this point, we have about 45 people that work for us.
45.
Yeah, we've kind of scaled back for, you know, creating better systems as well as the economy. But because we were up to like 60 people at one point, but then we've automated a lot. We've put a lot more. We built all of our own software, from the client login to what the staff logs into to the affiliate login. All of that is our own software. We're not using any outside stuff, and so it makes it really easy to communicate with the client, with the affiliate, to draw everything together, to make it, you know, just super simple from that standpoint. But I forgot the question though.
Adversity. Challenges in growing.
So yeah, back to HR. So growing the team was definitely the hardest thing. And for me, I got lucky because I hired this lady called Crystal, and she was my HR manager she's actually our chief operations officer
still
now.
With you.
Yeah.
I interacted with her.
Yeah. So she's worked for me for, I think, over 13 years now.
Wow. Okay.
And she's really, 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 really good at hiring people. And at just getting the pulse and understanding who they are, knowing how to fire them real quick if they're not going to work out. You know, pouring our time and our love and our energy into them to try to get it to work out for each person. Because there's no one that comes like, they're like, hey, I'm a credit stacking expert. There's no one that comes like that. We have to teach every single one of them. So being able to build out our departments and get people that really understand this stuff and to be able to hold on to them for long term, we had to just have a nicer location. We had to have better benefits. We had to have more of an employee-centric focus in terms of what would get someone to want to hire in and to put their trust into a company long term. You know, we were operating very much like a small business and not even, you know, offering benefits and stuff, you know, in the past. So, you know, getting all of those same things, you know, 401k, you know, all of that, you know, was definitely a big driver in helping retain employees long term. So that was definitely a big hurdle that was difficult. Of course, another hurdle is pay-per-click marketing. So advertising and being basically, like, our advertising was going great in terms of Facebook, YouTube, Google, until, and I forget exactly which years, I think it was around 2021 or 2022 is when they passed the, it had to do with like not singling people out in advertising or something. Basically, we weren't able to target people based off of their age or based off of their gender.
Or privacy.
Yeah, if it was a credit-based product, because then they're saying that it's not equal opportunity, even though you have to qualify.
Yeah.
It makes no sense. So I'm targeting a 13-year-old girl the same way I'm targeting a 64-year-old man. That's a pretty wide net that you have to cast now.
Yeah.
So we went from doing like 600, 700,000 a month off of pay-per-click marketing sales to that entire stream just gone.
Oh. Okay. So it just no longer made sense to advertise in that.
Yeah, I mean, we still have stuff going on Google and YouTube, but we're from both of those streams alone, we're maybe generating 100,000 a month.
Yeah. Wow. Okay. How did you account for that? What did you do about it?
Well, we've tried to do stuff about it, but we haven't found any way of really being able to cast a wide enough net where it makes sense.
Well, I guess like that's pretty substantial, right? $600K a month, $700K a month in revenue. So like, did you have to like slash departments? Did you have to refocus efforts?
Well, luckily at that time we were doing about $2 million a month. So it was a substantial hit, but it wasn't something that forced us to have to take such drastic actions.
Got it.
But it would be really nice to get it back.
Yeah.
And I've spoken to many different experts about it, and they're basically say that you just that there is no real, you can't target based on that. You just can't use that same targeting. You have to find a way of doing it through your video, through your, through your graphic, basically. And
through your advertising.
Yeah.
It has to resonate through the advertising.
And there's a lot of people that are doing that type of advertising, even for credit cards. And they can bring in leads, but they're not bringing it in anywhere close to what we're able to do, like
lead
with
quality
affiliates.
is not going to be the same.
Yeah.
Yeah. Now that makes total sense. So going back to then about the employees, like hiring them has been the hardest part. But it really hasn't been your responsibility. It's been Crystal's responsibility. Right?
Yeah.
So there's a couple different things. Benefits. Most people listening right now aren't the kind of people that provide benefits, right? Whether the company's smaller or everyone's 1099 or whatever. So what differences did you see offering benefits to your hiring or retention in your business?
You're going to attract people that are essentially similar to us from an entrepreneurial mindset that are too scared to run their own businesses. You're going to be able to retain those people.
So you're saying more like you'll hire more entrepreneurs?
Yeah. Yeah. And you'll keep them.
Yeah.
So it's really about the long-term keeping. If you have a retirement program, we've had one person retire from Fund and Grow, and officially through their retirement, and
Sweet.
Yeah. And so like if you have all of that, like I don't think that guy would have worked for me long enough to retire if we hadn't had those different benefits and programs, and because otherwise he could go to another sales organization and get paid that.
Yeah. What kind of benefits did you guys offer? Or do you guys offer?
So health, the 401k, we have it's called an ESOP, an Employee Savings Operation Trust. So what that does is the company actually puts money into a ESOP account for each employee for when they retire, they get paid a benefit that they don't even have to match. They don't have to put anything in for.
Wow.
And ESOPs are absolutely 100% awesome. If anybody's listening to this right now and they have like a really big tax burden, but you have a tax burden over 100,000, especially if it's like $1 million a year, then you can use an ESOP. An ESOP can definitely reduce the amount of taxes you're paying while redirecting some of that saved taxes as benefits to your employees.
Yeah. Well, definitely going to learn more about that because I've heard ESOPs.
Yeah, an ESOP is for a public company. So they're an employee savings operation program. They have a board member that would be running the program.
Yeah.
Whereas an ESOP is an employee savings operations trust. And I am the trustee because my company's not public. I'm the owner of it.
Gotcha.
So a private company would use an ESOP.
Got it. Fascinating. So I have to learn more about that. And then employee centric, right? Again, because like you look at every great business, it's always the people. Always the people. So how is your business ran where it's employee centric?
Well, to say it simply, as management, we care about our employees. We love them. And we know that it starts from the employee. How are you going to get someone to care about a client if you don't care about them as an employee? It's like your parent asking you to do something, but they're witnessing exactly the opposite of that thing.
Right.
So it starts with me. It starts with the management. And it starts with actually caring on a granular level about the different things that you're working on and being honest, being open. I think that all too often employees follow their employer because they're being told what to do. There's not a huge cycle of respect And then you end up losing them over time. You end up losing their heart. You might even end up losing them as an employee.
Yeah.
And then if you lose their heart, then they're not doing what they could do for the client. They don't, if they're a few minutes late for the client, do they care? If they don't get quite as much funding for the client, do they care?
Yeah.
No, there is a way of caring, and that's by witnessing to what it is that you would wish for them to do. And one of those things is you can actually teach them those ideas. So at Fund and Grow, we do, I don't know, we don't really have a name for it, but I do know that Zach recorded the last one and put it on YouTube. But we do like these law of attraction sessions, which is basically like anybody that wants to be part of it during work time gets to come in and to be part of a little seminar that I'll put on where we talk about law of attraction and all of the things surrounding that.
Yeah.
So
can you give me an example? Like what the last session you had, what do you guys talk about?
So the first thing that we do is we'll sit down and watch the documentary, The Secret. So you've heard of The Secret, right? That's a great introduction for people to understand. It's very physically motivated, if you will, on physical things, but it really kickstarts the idea of the law of attraction. Then from there, I'll talk about what the law of attraction means to me. Usually I'll tell my story of, being in the shipyard and changing my mindset and just explaining to them, hey, I was getting paid way less than what you guys are getting paid now.
Yeah.
You know what I mean? Like you can think I can do it, but you couldn't. If I could do it as a shipyard worker below where you are now, you could do it too.
Yeah.
And by the way, I've had employees that have eventually quit and gone off to start their own businesses. And I'm actually kind of proud of that. Like how many businesses do you know that were like, I used to be like this and this at Google or this and this at Facebook. And there was like, that was their big break. Now they're out here running their own business.
Yeah.
That's cool. I would love it for someone that has a huge business to be like, I learned with Ari at Fund and Grow. You know what I mean? Like that, to me, that's not a loss at all. Like Amanda moving on to work at Accruity. She started as my executive assistant.
Yeah.
She was not a CPA. She was who are the people that do the notaries for an attorney?
Escrow?
No, I forget. She has a
Paralegal?
Yeah, she was a paralegal. She was a paralegal, got hired in as my executive assistant, and now she is an executive at a company.
Yeah, she is.
That makes me so proud. And she became an executive at my company first. She became our COO before she was offered a job at Accruity.
Yeah.
So, and I love that. I think that that's what every entrepreneur should want for their employees is that you're not going to have someone be your slave for their whole life, but you can teach people how they can rise. And as you're doing that, you're making a whole process. There's all these other people, all these other Amandas in the company. My new executive assistant, Stephanie, is awesome. Absolutely amazing.
Yeah. All right. And so the adversity. So then let's talk about what the business looks like today. So you said how many people? You said 40?
Yeah, we're at 45.
45 people. All right. And so what does that look like on a day-to-day side? Like, do you have... Are you marketing heavy, service heavy, sales heavy? What does your organization look like?
So all of those things. So we got marketing stuff happening daily. There's a whole marketing team. There's a studio. They're recording probably something every day usually.
Yeah.
There's a sales team, the sales floor that's buzzing every day. There is the customer journey people. There is the intake people. There is our account managers who are the negotiators. Then we have some specialty loan departments where if you're a client with us and we can help you get other kinds of loans that I haven't even talked about yet, like not business credit cards, we'll help them. We don't really do a lot of those types of loans. We mainly do it for existing clients and for leads that we're in conversation with, where if they have a specific need or a problem, where we can help them. But our main bread and butter is the business credit cards.
Yeah, well, that was the thing when I was talking with you guys. It was like, well, it'd be easier if you just get an SBA loan. I was like, oh, really? Right? So I'm guessing that's probably what that is. So looking at the business then, I think there's a lot of noise out there about credit card stacking. Can you give some clarity? Like, what does it mean? How does it work?
Yeah. Oh, I'd love to. So this is going to immediately make sense for everybody because probably everybody watching this has a credit card. So I'll just start with talking about a credit card and then we'll talk about business credit cards. So if you have a credit card with, let's say, Chase Bank, and let's say it's a $10,000 card, you can go back to the same exact bank and you can apply for the exact same product. And if they won't allow you to apply for that product, you apply for a very similar one to that product. But it's at the same bank. So let's say I have a $10,000 card. The 0% period or the introductory period of 0% is up because I've had this card for a year. So I've had a $10,000 card for a year, no special offers on it. I go back to the same bank and I apply for the same credit card. And they say, we gave you $10,000 a year ago, so we'll give you $5,000 today. So now this client has a balance on this $10,000 card. So how are we going to, $5,000 isn't enough to move the $10,000 onto, right?
Right.
Doesn't matter. We take the $5,000. So we take the $5,000. Now we have a $5,000 account. We have a $10,000 account. The $5,000 account is a new account. It's got 0% on it for either 6 months, 9 months, maybe up to 22 months. We take the $5,000 and the $10,000 on a separate call and we merge it together. Now we have a $15,000 account. The 0% is over the entire account. This is the only way to bring 0% back to an account. You can't take an old account and get 0% back on it unless you apply for a new card and merge them together. Now you have one $15,000 card and you have less of that product. So you can go back and apply for that product again a year from now.
I've never heard this before. I probably should have heard this before. It's fascinating. So, all right.
So, and we do this on the business side.
Okay.
Because if you do this on the personal side, like there's a lot of these credit card stackers that will apply and get you a bunch of personal credit cards. Those personal credit cards, when you use them, they're going to, as soon as you start bringing up the balances, what people don't know about a personal credit card is that you can't go over 35% of the credit limit to the balance. So on that $10,000 example, if I put $3,500 on there, I'm now at that 35% ratio. I go above $3,500 on a $10,000 card, it starts to bring my personal scores down.
Right.
So if I get a whole bunch of personal credit cards, I spend them in my business. Now 6 months, 8 months later, the 0% is about to expire. How am I going to refinance that if those are all personal credit cards? I'm not going to be able to refinance it. I'm going to be carrying a lot of personal credit card debt on my personal credit card. On my personal report, I mean. And so what we do is when we're applying for these cards, we're using the client's business so that the credit card doesn't even report to the personal credit report. Now, not all banks allow this. There are some banks that you click on their business credit card and they'll report it right to your personal credit. So we don't take any client to a bank that would report it to their personal credit. We're taking them to banks that we know 100% confirmed, only going to report it to the EIN number. But once it's all the debt is on the EIN number, once it's being carried by the business, it makes it so much easier to go back for batch after batch. When I say batch after batch, I'm talking about to be able, because when we do this credit card stacking process, I explained a $10,000 card and another card, like merging them together. But if you're trying to go for larger amounts of funding, you're going to be applying for 4 or 5 of these credit lines in the same application batch. So a client comes into us, we look at their credit report, we do everything we possibly can to help raise their scores. We're not a credit repair service, so we're not talking about deleting negative things. We're talking about merging cards from the same bank together. So they have less accounts with higher limits. We merge them into the accounts that were open the longest. And we would even recommend that for the $10,000, $5,000 example of the merge, that we would merge it. We're merging it into the $10,000 account because the $10,000 account was open for longer. But in the case that you're merging 3 cards together, you would merge them all into the account that was open the longest. So now you have higher limit on the account that was open the longest. The accounts with the shorter seasoning fall off, and that helps your overall ratios.
Right.
So doing it on the business side allows you to be able to do the process over and over, and you don't have to pay it down, the credit cards down to 35% to do a new batch, which you would on the personal side. Now on the business side, you do have to pay it down a little bit, but it's not down to 35%. It's like 60%.
I see.
So they don't want them to be fully maxed out when you're doing new applications. So we help the client, we make sure that they're at those ratios prior to moving forward. And the Fund and Grow service is going to navigate people around any of those roadblocks. We're going to be like, nope, cannot do that. A lot of times people would move themselves into a situation where they're kind of establishing with the bank the problem that they have. And then it's like 6 months, 8 months, a year before you can go back to that same bank because you've established that problem. We got to get these things fixed before we go and apply. Otherwise, you're kind of establishing with that bank that you have that problem.
I see. Okay. And then how would I use, so I'm newer, right, in the business, and I'm thinking about scaling my business. How do I use Fund and Grow to scale my business?
So now there's two different ways. Let's say an entrepreneur just needs access to funding to buy more of their own products and to buy more product to be able to sell, like an Amazon reseller or a real estate rehabber. Obviously, just them getting access to the funding alone is going to be able to help them scale their business. But there's a lot of companies that we work with that we're able to help them sell more of their own products by working with Fund and Grow, where they have leads that are coming to them, and the leads want to buy their service. It might be a $50,000 program, a $100,000 program, or even something less than that. $25,000 is pretty common. And the client would like to buy it, but they can't. So we have a lead pre-qualification tool. This is one of the things that helped us scale, is having this lead pre-qualification tool where our affiliates will put the client's information in, and with the client's permission, they do a soft pull. So it's not a hard pull on the credit, it's just a soft pull. And then immediately it runs their credit and lets them know how much funding that client would qualify for. So now this affiliate can qualify their lead, whether or not the lead even gets started with us.
Yeah.
So as these affiliates are qualifying their leads and finding out if these are good leads for them, they also become a lead for Fund and Grow. They become something that Fund and Grow can sell. And in either scenario here, when they get funding, they're using it with this company that referred them. So in some cases, it's about helping the company sell their own product, where the product is simply too expensive. It's $50,000 product, $100,000. In many cases, it's about being in conjunction with the affiliate's product, where they're selling them a $5,000, $10,000 real estate education course, but they want their client to be successful. And the only way to be successful is to have a little bit of OPM, other people's money, a little bit of loans to be able to actually spend in the real estate program.
Right.
So it could be that they want to use this as an adjunct to help their clients because funding is just part of what it is they're teaching. Or it could be that they are trying to actually sell more of their own program directly because their program is so expensive.
So if I'm newer in the business and I'm looking to get some software, buy some data and so on, right? I can apply for this, right?
Yes.
What if I'm trying to flip more houses? Like, can I use this money? Might sound like a dumb question. Can I use this money for a down payment?
Yes. That's actually an excellent question, because people might be thinking, well, these are credit cards.
Right.
How are you going to use a credit card for a down payment? Where in the escrow account do you swipe, right?
Right.
Well, I'm so glad you asked this question. So Fund and Grow, we're not just applying and getting credit cards and like, okay, goodbye.
Yeah.
We're helping you. We're teaching you about Melio payments, about plastic, about Bill.com, Bluevine, Zill Money. All of these payment processing services are about being able to do exactly what you're talking about. So Melio, for example,
I've never heard of Melio before.
Yeah, Melio payments, that's a big one. Another one's plastic with
a Q.
With a Q, yeah. So plastic allows you to fund an escrow account directly.
Okay.
So you set up your Melio account, you add your credit cards in, then you take your invoice, you upload it from the escrow company, and you have to just request it, and then you upload it, and then they will either do a wire, an ACH, or a old-fashioned check. The old-fashioned check is the cheapest. The wire could be up to like 2.5%. The check is usually like 1.5%. But that way you're able to use services that the banks absolutely approve of, the government absolutely approves of. They're not going against breaking any type of regulation. We're not liquidating the cash off the card. We're not trying to pull the cash off the card, because all of those things are red flags to the bank. The bank says, if you want to pull the cash off, use a cash advance. But there's other better ways of being able to purchase things, like, for example, funding an escrow account without having to pull the cash off the card.
Yeah.
Just use the payment services. If you need to pay a contractor, then use the payment services to pay the contractor. Because if they don't accept credit card, then you take their invoice, you upload it into Melio or into Plastic, and then they simply send a check to whoever the contractor is.
Yeah. So I think it's great because again, like I hadn't heard of Melio. You said, yeah, like it's I go back to I'm pretty old, so I remember watching like these sitcoms as a kid. Like these guys buying houses with credit cards for flipping, right? And it's like they're flippers, and it's a disaster, right? Like because they bought the house on a credit card and it didn't sell on time. It's like, what are you gonna do? It's 18% interest, right?
Yeah.
Which today is funny because like it's just hard money, but as a kid, I was like, how are they gonna figure that out? So it's really fascinating to see that you can actually use a credit card to fund an escrow account.
Yep. And sometimes you might have to use 3 or 4 credit cards. Within Plastic, you can add a whole variety. You can add all your credit cards in there. And then you can say, I want to pull 10 from this one, 5 from this one, 3 from that one.
Gotcha. So right now, I run my business. Any expense, I basically run through Amex. Any perspective or opinions on using Amex versus any particular other business credit cards?
Amex is a really good brand, and they tend to have good cash back. What's the rewards on that particular card?
I don't even know. I got platinum. I got a gold, right? Everything but the black. So
yeah.
I don't know. Like I know we have like the hotel deal, right? Like we can use for a hotel, but I'm not the points guy.
Yeah. So it really depends on what you're trying to do. Off the top of my head, I couldn't tell you exactly right now which card is like the best card, but that's definitely something that our team knows.
Yeah.
And in our case, we're looking to try to get as much funding for the client. So we're trying to get them the Amex card too, but we also want to get them to Chase, the US Bank, and Wells Fargo, and every other card, because it's about the total amount that we're getting. But in your case, you're talking about using funding and paying that credit card off every month for spending that you'd be doing anyway. Right. And what's the best cash back or rewards that I can get? And it kind of does vary, but Amex and Chase tend to be 2 of the highest. Yeah,
we use Chase for personal. Chase Sapphire Reserve, whatever, for traveling. I don't even know. That's the wife's department. And that's all I know you put in here. Like, you can use credit cards as asset protection. I've got some big news, and you'll want to hear all of this because I'm going to give you the best bonus ever at the end of this video. You all know that I've been providing sales training for 6 years now, and I've had the opportunity to train hundreds of the best teams in the country and thousands of individuals as well. And they've all had wild success along the way, some of which you've even seen on this podcast. You also know Ian Ross, who has been coaching alongside me now for over 2 years. He's the biggest sales geek ever, and he's been training business owners and individual contributors ever since he started working here. He even runs the Close More Sales podcast. But we had a problem. There was a lot of confusion. What is it exactly that we sell here? Is it Disruptors training? Is it Steve Trang training? Or is it Close More Sales training? It's none of those. It is objection-proof selling. Ian runs objection-proof selling for business owners and individuals. I run objection-proof selling for teams where I coach their entire team. And to celebrate the rebrand, I want to give you something that I never would have thought been possible until recently. We've been training this AI bot for over a year now to score all of our sales calls internally. Every call we run, we have the bot review the call to Ian and mine exact standards for sales. We run every one of our team members' calls through the same exact AI bot. And now we're giving it to you for free. This bot will review your calls based on dozens and dozens of metrics. It will tell you what you did well, what you can do better, again, by the standards of the objection-proof selling formula. And if you want to use our bot for free, just head over to our website, objectionproof.ai. Again, objectionproof.ai. I want to emphasize here, you're getting access to our bot, which allows you to get better at sales for free so that you can make even more money now without having to spend another dollar. Go check it out now.
Yes. So we've had some really cool experiences. Actually, I'll just tell you about my personal ones. So I had 2 different projects that I was doing that I had to, that I basically had a problem with the contractor and was like, what am I going to do? Am I going to sue them? And so one of them was an electronics project for $35,000. And another one was a solar panel, hot water solar panel, kind of like a, like weatherizing your house. It's like a whole little package. I forgot, that was like $17,000 or something. And in each of these cases, they were a couple years apart. But what happened was the contractors didn't finish. They weren't able to get the house, they weren't able to get past inspection. So the solar panels did not get past inspection. In the case of the electronics project, the contractor, even though I had done a $100,000 project with them at the Fund and Grow office building, they completely crapped on this personal project I did at my house. Absolutely shocking. But am I glad that I put it on my business credit card? You bet. Because when it came down to it, I was able to go, well, first off, I tried as hard as I could with the contractor directly. You're halfway through this project, please come and finish it. You know, like you're not on schedule, blah, blah, blah. I'd go back and forth with them until he stopped communicating. Then I went and called my credit card company. And I was like, listen, you know, I can show you all, I'm trying to get this project finished. I've already paid them. And so long and short, I was able to initiate what's called a chargeback, and I was able to get all $35,000 back.
Yeah.
Now, I did not think I was going to be able to keep that 35 grand because in the case of a chargeback, once you've initiated it, they give you the money back, but then the business gets to respond.
Right.
So I thought, just like the other chargeback I'd done before that as soon as I initiated it, this guy is going to be in contact with me. He's going to come and get the job finished, and then his $35,000 will go through.
Right.
In this particular case, I never heard back from them. I got my 35 grand back, and the project was almost finished. I had to pay someone else to come and finish it, and that didn't cost 35 grand. And so in the case of the solar panel, what happened was it was a hot water solar panel that it didn't pass inspection. And so it was essentially red tagged. And I tried to get them to come back. I tried over and over. I even left a Better Business Bureau review dispute on them. Nothing. I charged back on them. The guy calls me the next day. The next day he calls me. And so he's like, oh, it's not my fault. It's your fault. All right. Then I guess I'll keep the 17 grand. Yeah. But instead they came out, and even though it was supposedly my fault, they finished the job. They got it to pass inspection. The county passed it. And they were able to charge the $17,000 went through. So basically, when you initiate a chargeback, it doesn't mean you're going to be able to keep it, but it does mean that the credit card company becomes an arbitrator, or they actually use an arbitration company. And essentially, they look at this transaction, and they become like a little judge between you and the contractor. And until the contractor can prove that they've done it, they don't get to keep the money. So credit cards. So we had a situation of a client redoing a rehab or redoing a roof on a rehab. He was in a new area that he didn't usually do business. He was dealing with a contractor that he was unsure of. And so he made sure he got a roofing company that accepted credit card. Inevitably, he had a problem. It didn't pass inspection. And he was able to do the chargeback process, which then got the company within a few days to come back and to finish it.
Funny how that works.
Yeah. So you might not ever think of using credit card as a way to hold it over the contractor, but in today's world, it's definitely worth doing. And these are the benefits of using credit card, of Visa, MasterCard, American Express, of that process, is that chargeback is built into it.
Yeah.
So I think it's an important thing to, and another thing, with if you're a business and you're not accepting credit card, my question becomes why?
Right.
Are you unable to because so many people have charged back on you that no merchant account will give you a merchant account anymore? So it tells us a lot. Just if a business doesn't accept credit card, that might be enough for you to say, I don't want to do business with you.
You know, every time I see a company that doesn't accept credit card, I always think it's unfortunate you have such bad business acumen. Like try not to be a judgmental person, but like you see these guys like, oh, I'm trying to save 3%. It's like, really?
Yeah.
Really? How much business have you lost?
Right.
Saving 3%. For me, the convenience is way too important. So,
yeah.
So one of the things that we talked about, right? Like when we were talking before, what was important to me to make sure everyone understood is like, you have this ability to get people $250,000 fast, right? So someone's listening and they want to work with you to get capital. Like, what is the process to get started?
So the process is they would go to the Fund and Grow website and they would click the pre-qualification link, which is right at the top of the website. Without the pre-qualification, we don't know what someone will qualify for.
Yeah.
So we have a 60-day money-back guarantee. So we really want to know before you get started if we're going to be able to help you, so that we don't have to run your credit card and then give you your money back. So the pre-qualification tool immediately within like 20 seconds prints out exactly how much funding they'll be able to get access to with a soft pull. It does not leave any inquiry on their report.
Yeah. And so there are a lot of companies out there that offer the service, right? For someone that is wanting to make sure they work with the right company, what questions should they be asking? What are some red flags to look out for?
That's a good question. So,
because it's hard for us on the outside looking in.
Yeah.
Or on the outside, like what makes a good company or not?
Yeah. One of the things I would ask is, are these all personal credit cards or are these business cards?
Mm-hmm.
So many of the companies that we work with, they apply for personal credit cards. And then they're like, well, we could do business too if you want. What do you specialize in?
Mm-hmm.
Will you, like Fund and Grow will help you set up the entity. We'll make sure that the EIN is set up properly so that we can use it in conjunction with applications and keep it off your credit report. So that's really important, is keeping it off your credit report. I would ask that. Now, another thing Fund and Grow does is, let's say that someone's signing up for us and they're using a credit card that is maxed out, or I'm sorry, close to being maxed out. And they're like, well, I'm going to put it on this card. Fund and Grow will be like, no, because then now it's going to hurt your ratio, and then we're not going to be able to apply for you.
Mm-hmm.
So we're going to, even through that pre-qualification tool, look at all of their credit cards that they already have. We recommend that you put our charge on this card or on that card to make sure that you're at the right ratio, so that when you get started, we can move forward right away. A lot of companies, they're looking to make that sale. That's it.
Right.
And
they're not first.
Yeah. And they're not asking you to pay by credit card. We just talked about that.
Mm-hmm.
They don't have a 60-day money-back guarantee. Most of these companies, I haven't seen a single one that's offering the third-party payment services to be able to help people after the to be able to actually make their payments and do the things. So there's a whole variety of things, and I would say that another thing is just being able to have access to a team that's built $2 billion worth of this type of credit cards.
Yeah.
When you're applying for these and getting access to these, you don't know what to say to the underwriter. You don't know until you've talked to Fund and Grow, and Fund and Grow tells you, listen, this is the psychology of what they're looking for. This is what they're going to ask you. This is what you need to tell them. No, we're not talking about lying or saying anything untoward. We're talking about just being able to present their business in a way where the banks are like, approved.
Right.
So that's another thing. There's a lot of these services. In fact, I don't know any service that teaches the client how to do the follow-up that we do. Like if I had our CRM pulled up in front of you and I was showing you this month where we're getting whatever, like 25 million in business credit cards, and where you could see 5 million of those credit cards came from the application. 20 million came from the follow-up process.
Yeah.
So we would have got 5 million had we just done the application. And even that 5 million in business credit cards, the client wouldn't have got had we not done the positioning, the merging, all of the different ratios and things that we're looking for before we even applied. So before we even applied, we're doing that positioning. Then when we apply, that's usually less than 1/3 of the total funding that we're going to be creating. 2/3, if not more, come in through the negotiations process. We don't know any other company that even does that.
Negotiation with
the banks, to be able to follow up and communicate with the banks, to be able to get whatever the limits they gave you popped up to a higher amount. That's the bread and butter of what Fund and Grow teaches their clients.
Gotcha. And then like I've seen some stuff, on Instagram or so on. It's like, hey, you get business credit cards because when you get a business credit card, you don't have to pay it back.
You don't have to pay it back?
Yeah, that's what I've seen. It's popped up in my feed. And I was like, this is crazy.
That's
Is that a red flag?
That sounds like a red flag. Yeah, you don't have to pay it back. Yeah.
So what are you seeing like these promises, like your competition? What are they saying out there that's like, I don't know if that's true. Are you seeing anything else like that out there?
There are, yes. So some of our competition, what they do is they will directly interact with the banks as if they are the client.
Really?
Yeah.
Okay.
So that's, like Seek Capital and a couple of these businesses, that's one of the things that was mentioned in the FTC lawsuit. You can't, even if you have a power of attorney on your client, you can't call the bank and pretend to be them.
Yeah. Well, pretending. That's the problem.
Yeah. Yeah. You can have a power of attorney that you can do verbal and audible.
Represent them.
Yeah. Yeah. But you would have to tell the bank that. And then if you tell them that, then the bank doesn't want to move forward under that arrangement.
Got it.
So it's really important that we are advising the client on how to do this properly. We don't want to get your card shut down.
No.
And so that's what can happen in those situations is it ends up hurting the client, not Fund and Grow.
Mm-hmm.
So we need to make sure that what we're teaching the client is going to benefit them the most. Just like applying for personal cards versus business cards. If I only focus on personal cards, I could get you way more. I might look better.
Mm-hmm.
But the way to help you long-term is to get you business credit cards that do not report to your personal so that you can actually use them time and time again and be able to grow that amount and not bog down your personal.
Can you explain that a little bit more nuanced? Like why? And you might have said it already, but like, why is business significantly better than personal? Because you talk about 60% versus 35%.
Mm-hmm.
Are there other reasons? Like does the limit just continue to grow over time? Why business credit over personal credit?
So imagine that you are living like the rest of your life. Like you got kids, you got other stuff going on, and you need to use your credit. Maybe you need to co-sign for your kid on an auto loan, or you need to do, maybe in your real estate business, you're getting more mortgages. These are all reasons why you don't want to take a personal hit for using money that's going to be invested into your business. If you're putting money into your business, that needs to be coming from a loan that's been approved for a business.
Right.
I mean, I'm not saying that anyone's doing anything illegal by using personal credit cards for their business.
I'm just saying just strategically.
Yes.
You're better off going that way. And then you guys do, was it 20 million a month now?
Yeah, I mean, we've done more than that.
funding.
We've done like 30 million a month. We've done down to like 15 million a month.
Yeah.
It kind of it varies.
But like we were saying at the beginning, 2 billion, you as an organization, you guys have funded.
Yep.
So that's a lot of money.
Yep.
And you're clearly passionate about it. Why are you so passionate about Fund and Grow?
So I love being able to help entrepreneurs. When I think of what I learned in school, and they used to teach us about America, right?
Mhm.
And I know that hundreds of years ago, Americans were like trading furs, and they were farmers, and they were hunters, and
Yeah.
they were woodworkers, carpenters. And what would people do with that? Did they take it to Walmart?
No.
No, they directly represented their wares in the market.
Mm-hmm.
And here we are, fast forward a couple hundred years, 99.9% of the people all work for some big company.
Right.
Fund and Grow is helping entrepreneurs leave their corporate job and do whatever they do, whatever they're going to bring to market, to do it for themselves.
Mm-hmm.
To directly be able to give them access to leverage. I'm sure you've been on cruises and you've been down in the islands, like in Jamaica and these different islands. And when you walk around, when you go on the little tours and stuff, you see these houses that have the rebar coming out the top. You know what I'm talking about?
Mm-hmm.
They got like 1 level, 2 level, but there's still rebar sticking like. And what we find out, the reason why that doesn't happen in a lot of Western countries is because people have access to OPM.
Mm-hmm.
You can get access to enough money to build the whole house.
Right.
In Jamaica, mom and dad build the first level. Second level's waiting for the kids to build. You know, they don't even have enough money per se to be able to build the whole thing. And here we are with this amazing ability to be able to lend millions or hundreds of thousands, if not, and for some people, millions of dollars to be able to buy things like real estate or businesses. To me, that's just absolutely amazing. You know, like we live in this Disneyland that gives us access to all these different things like business credit cards and SBA loans and stuff like that. Like, how can we not be thankful and take advantage of these things and, you know, use them to help build, you know, our businesses, which end up helping our families, our communities. You know, I think every man should be working hard on trying to become an entrepreneur. I just feel very strongly about it, that when you're working for yourself and you're putting all of your energy into things for yourself and your family, you're going to put so much, you're going to be 24/7. Do you ever stop, Steve? You're never going to stop. And it feels freaking awesome. It feels just amazing. Like I would never want to go back to, you know, I mean, not that saying working for people is bad, because I love my employees, but it's just not for me.
Yeah. So there's a special place in your heart for entrepreneurs. So then, what is something you want to be remembered for when everything's said and done?
helping a lot of people.
Yeah. So
helping businesses grow, helping a lot of people get out of their 9-to-5, out of their corporate, into doing something that makes them feel proud for themselves. And it's just like, it doesn't matter if it's gardening or woodworking or if they were hunting, you know what I mean? Like back in the day or even today, it doesn't even matter what you do.
Mm-hmm.
Just find a way to be of service and of value to others, and guarantee you'll have a lot of people coming to buy your service.
The best thing about this country is there's literally an unlimited number of ways to make money. Like, you see like, I do a lot of marketing and internet marketing now as well, on top of everything else, is get into like, people like they make money from like, selling Etsy templates, right? Like these things, you make a template for an Etsy site and you sell these templates for like $17, and that's their whole business.
Mm-hmm.
Selling these little $17 templates. There's literally no limit to like how you can make a living.
Yeah.
Working for yourself.
Yep.
In this country.
Yep. And also the Amish community, it wasn't really Amish, like I told you,
Right.
They're called the Bruderhof, but they're extremely entrepreneurial. They now have a lot of different, what they call Bruderhof houses, where they're like inside, like there's one in St. Pete. They do all kinds of things, from like carpentry to daycare. Mm-hmm. And these aren't even in their main locations where their main businesses are. So I just find that there's so many things that are that down to earth, like daycare. That's such an easy thing to, and it's also something that people pay a really pretty penny for.
Yeah.
And how often are people worried to drop off their kids at some of these big corporate places or some of these, more known places.
Yeah.
And so there's just so many different niches and ways to get in to be able to help. One of my friends, he helps people by doing this process of putting magnets on them. This guy didn't know anything about that. Mm-hmm. And he learned about this biomagnetism process. Mm-hmm. And if you Google it and look it up, it's a huge thing. It's like it's a wellness thing. Like over in Europe, your insurance pays for it and stuff.
Oh, wow.
Yeah, it's a real thing. I do it, and it's unbelievable how it makes you feel. They call it magnet pair therapy. You've heard of like acupuncture, right? So they take the needles and they put it on the different points. Yeah. Well, the magnet pair therapy is by taking two magnets, and it creates a flow between them from the north to the south. Mm-hmm. So they put it on like one side of the heart and the other side. Mm-hmm. And then it flows through and gets the chi or the energy to move rather than using the needles.
Yeah.
And so they put the magnet pairs on either side of all these different organs that they want to do that to.
Interesting.
And this guy is now making like 10, 12 grand a week. He went from charging like $100 a session to like $300 a session to like $1,200 a session.
Yeah. And
he says, I wish I had just listened to this other guy that was telling him, he's like, you got to charge more. You got to charge more. You got to charge more. And that is, anybody could get into that particular industry. Mm-hmm. The magnet pair therapy is something that you can get certified on. You can go and do. And people are trying to get into the holistic alternative health space, more than ever before. So like I find that type of entrepreneurship just absolutely amazing. And I had this other friend who I met him when I was buying guns at this gun shop that he owned. I'm from Florida, so we love guns. Oh, yeah, it's Arizona, so you guys do too.
Open carry everywhere.
Yeah, but under some of the past administrations has kind of been under attack. So his gun store wasn't doing too well, and so he went into woodworking, and he built this shop in the back of his house, like outside, like an actual shop. And he's done all kinds of woodworking stuff for me, for my friends, for all these. He has a whole business now doing it. And I think he makes more than what he was doing guns. Mm-hmm. And so this is like, it's so easy, actually. You just have to like put your energy into something and keep doing it. Like I have people all the time that are telling me, Ari, why are you not doing this type of loan and that and doing this and doing this? You have all these clients come to you. And what we got good at was doing one thing, focusing on one thing and doing that really, 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 really well. Right. Not focusing on 1,000 things and all the new things. Mm-hmm. We're doing the same thing, business credit cards, that we did when I got hired by Dave.
Yeah. What is your superpower?
Superpower. I guess I should say our superpower is funding people.
That's a company superpower.
Yeah, that's our company superpower.
Personally?
I don't know that I have any superpowers.
What would your Daniel is your partner?
Yes.
What would Daniel say?
What is my superpower?
Mm-hmm.
I don't know. To annoy him. No. I mean, I guess they would say to bring in the leads, you know, to make it easier for everyone in the office, to make the salespeople happy.
Yeah. Probably the most important thing in an organization.
Yeah.
Get the salespeople to make it easy to sell. And I guess the last question here is, what book have you gifted more than any other?
Have I gifted?
Mm-hmm.
Well, unfortunately, I would say that's the Fund and Grow book.
Mm-hmm. You have a book.
Yeah. But putting my own self-serving book to the side, which is not near as good. Abraham Hicks, The Law of Attraction,
Mm-hmm.
without a doubt. Actually, I'd recommend any of Abraham's books.
Mm-hmm.
So
yeah, I know his name, but I'm trying to think. Like, I've actually picked up any of his books.
it's actually I know it sounds really weird, but it's actually a female, and her name's Esther Hicks. But she's like she calls herself Abraham because she like channels the information. I don't care where the information comes from.
Oh,
when you hear the stuff that Esther talks about, it's completely changed my life. Esther is the reason why I went from working in the shipyard, because she's also one of the people that was in the original version of The Secret.
I see.
But she was actually so much in the original version of The Secret that when it went international 2 years later, because I think it came out like 2002, and then like a year, and then they were on Oprah, and then like a year after that, it was like all over the world. And on the international version, they actually cut Abraham out because she was receiving like 60% of the revenue of the entire film. And they were like, what can we do? And Abraham's like, well, I don't care. Just cut me out. She lets people use her content on YouTube at no charge either.
Right. Yeah. If I remember now, I think our ops person in our organization is always listening to that. I think that's the one she's always like, you got to listen to this. Like, yeah, I will.
Yes. Once you start, you become addicted.
Yeah. Got it. Okay. And so again, if someone wants to connect with you, it's just fundandgrow.com.
Yeah, if they want to connect as an affiliate, then I would say reach out to me directly.
Mm-hmm.
I could leave maybe my email address.
Sure.
Or yeah.
What's the best way to get a hold of you?
Well, my email is Ari, ARI, and then period, then Page, PAGE at fundandgrow.com.
All right.
And I would love to reach out. For anyone that reaches out to me to talk to them, and any client that wants to get started or just to see what they qualify for, that's where I'd recommend go to fundandgrow.com, click on the pre-qualification tool. Yeah.
Perfect. Simple enough. What are some last thoughts you want to leave all the listeners with?
Last and first, get started doing something now. Like my mom used to tell me when I was younger that I would probably end up selling ice to Eskimos. And I didn't understand that. But now I wish I had started way earlier. Mm-hmm. Like I didn't need to have a career working in the shipyard and all that type of stuff. Mm-hmm. You know what I mean? I could have just started doing what I was passionate about, which is talking to people in business and just communicating. Because I'm very certain I could sell whatever. If it was ice and if it was Eskimos, I'd do that too.
Yeah. All right. So get started.
Yes.
All right. Perfect. Well, thank you very much.
Thank you, Steve.
Hey, you're welcome.
Appreciate you.
Thank you guys for watching. We'll see you guys next time.
Shout out to Steve Train. Jump on the Steve Train. Disruptors.